The third quarter in emerging markets was dominated by events in China, namely increased regulation and the well-publicised troubles surrounding property developer Evergrande. Together, these two ongoing events have dominated headlines and have also been the principal drivers behind the negative performance during the quarter. Whilst we acknowledge that the risks in China have increased, we remain optimistic about the long-term investment opportunities within the country. We believe we are invested in a selection of high-quality, competitively advantaged businesses that will continue to benefit from the strong, long-term structural growth trends in many parts of the Chinese economy, and are capable of delivering substantial long-term earnings growth and shareholder returns. The emerging markets benchmark declined by 8.1% in the quarter, primarily driven by events in China. Though the strategy has significant exposure to China, it was able to modestly outperform the index thanks to strong performance from holdings in Russia, Vietnam, and India. A key contributor to performance was our investment in Vietnamese retailer Mobile World. Though the spread of the Delta variant continues to impact economic activity in Vietnam, Mobile World's grocery retail business is flourishing as the pandemic accelerates the transition towards formalization of the sector. We expect the company to deliver circa 25% earnings growth in 2021 and believe that the business is well set to maintain that pace over the medium term, benefiting along the way from the rapid growth we expect in the Vietnamese economy. During the quarter, we initiated a new position in Taiwan's leading B2C e-commerce retailer, Momo.com. Momo's market dominance is underwritten by a strong share of consumer mind and a formidable distribution capability. We expect that these advantages will be hard to dislodge and that Momo will remain at the top of the Taiwanese e-commerce industry for many years to come. The rewards for such a position should be material. E-commerce penetration in Taiwan is well below regional peers and should pick up significantly over the next decade. Taiwan's first real lockdowns, which occurred earlier this year, should only accelerate this process. An interesting development at our Mexican consumer conglomerate FEMSA was its domestic Coca-Cola bottling business issued bonds with covenants directly tied to the reduction in its water usage. With Mexico's water stress over the next 20 years expected to reach high levels, reducing the company's water intensity is both a pressing issue at a company level as well as the wider national good. Whilst we are starting to see more sustainability-linked bond issuance globally, they are still largely in their infancy within emerging markets. We applaud this initiative and think it only increases the sustainability of what we consider to be a great franchise.